panned out this week? Well, it was a stellar week on Dalal Street, the Nifty registering its largest weekly gain in more than 4 years, with FII staging a strong comeback, marking their biggest net purchase of 2025, with a buy tally of over 7,000 crores. The border markets too closed on a 5-year high. The rupee too logged its best week in more than 2 years. My colleague Kunal is here with us to help us decode the legs of the rally in the week gone by. Kunal, there's been a bit of worry with respect to the markets before this week on account of Donald Trump's tariff threats and, of course, recession in the United States. But this week was a comfort week for the markets. So help us understand what really were the triggers for this rally that we saw in the markets.
Yes, we've rallied almost 1,200 points now. If we add, it's almost 1,400 points for the index from the last 2-week lows or the 4th March lows. But there are multiple reasons why the markets formed a bottom. One of them was one of the factors which we discussed statistically a few weeks back, that we went into 5 consecutive months of downtrend, and historically whenever that has happened, it's resulted in the index going into a very strong recovery. Oversold natures of RSI, market trends, market sentiment, market breadth, all of them were oversold. And then the major asset classes which impacts the index trends, which are the dollar index as well as the crude prices, even they had started to fall. So that was a premise where the index managed to move up higher, and we formed a base sub the 22,000 mark. But then we look at the interesting charts over here, that in historical parlances, what has happened when the index went into a 5 months of a consecutive downtrend. So I've looked at the like-to-like comparison. This is, for example, the charts for the year 1996, when there were 5 consecutive months of the index going to a downtrend. Post that, you saw the index not just moving up higher, but going into 2 successive months of a very strong price uptrend. And in that case, it was almost like a 10% recovery. So far this month, we've rallied almost 4.5 to 5% on the index, and it looks like that we could be mimicking the behavior what we'd seen in the year 1996 for the index, which means more upside could be seen on the index over the next few weeks. Then we look at the other data points, which is very interesting in terms of the oversold market breadth. So on 4th of March, or just prior to that, there was a point where almost 90% of the stocks in the Nifty 50, mid-cap 50 and the small-cap 50, they were falling below the 20, 50 and the 100-day moving averages. So that indicates that the market breadth was extremely oversold, and now the market breadth has eased off significantly. So on an average, at the current charts, we are looking at a market breadth which is almost like a 30% to 35%. Number of stocks which are now trading below their key moving averages. So that itself indicates that there's been a relief rally which has not been restricted towards large cap names, but it's spread across towards the mid caps and small caps. Then the other interesting data point in terms of the charts for the index, how over the historical parlances, the Nifty has managed to look very attractive when we've ended this 5 months of consecutive downtrend. So in historical events, when the index has moved up or into a downtrend, whenever we've seen a trend line break for the index, that trend line break generally stops or a first stop is at the 200-day moving average. So this was in 2021-22, where the index had shown a very similar kind of a trend line breakout, and from there we managed to move up higher, which means from current levels, the first base target which you should be looking out for is around the 23,800 to 24,000 mark. Last but not the least, is the Bank Nifty the only index which has moved up higher? The answer to that is that there are other sectors which are playing their own part in terms of support. So you have the PSU index, you have metals, energy, media, oil and gas, pharma. All of these indices have actually outperformed the Bank Nifty in terms of the price relative gains. And within the Bank Nifty also, there are 3 heavyweight names on the banking index, which is HDFC Bank, ICICI Bank and Kotak Bank. All 3 of them are trading above with a margin of 5% at least on an average about the long-term averages. So all of that premise indicates that this 1,200 to 1,400 point rally what we've seen right now is not a one-off, and there should be more legs on the upside for the index moves.